All right. Hello, YouTube. It is I, Duke. Welcome. Thank you for watching. Today, I want to talk to you about money. And this is something that we can't avoid any longer because it's very important. It's very important. See, there's a certain portion of our population that subscribes to the biblical, a twisted biblical interpretation of something that, was said in the Bible. I don't know which book or passage it is, but it says, money is the root of all evil. Or at least that's what people think it says. That's not what it says. It says, the love of money is the root of all evil. The love of money. That is, the love of money for money's sake. Because a bunch of money sitting in a bank account has no power. It's only when money is put to use that it can do what it is meant to do, that it can create value, that it can change our lives, change the lives of others, create wealth, and create good outcomes. So no, money is not the root of all evil, but loving it is. Loving it meaning not wanting to part with it, not wanting to use it to take risk in the hope of gaining more income, wealth, and a better financial future. So today I want to explore a structural issue that we have as Americans, it seems, and that is a lack of financial education. Lack of financial education. See, we, as Americans, generally speaking, spend way more money than any other population on a pound per pound basis. We are the biggest consumers on earth. And unfortunately, this consumerism behavior leads some people who actually make a very high income to being poor, to not having any wealth. And here's why. Here's why. So oftentimes it seems that there is this psychology that the rich, to be wealthy, is to have a high income. And that's, while it tends to be correlated with with each other, it tends to be correlated, it's not always true. And here's the breakdown of that. So I see this time and time again, where somebody goes out, and I'm 25, so this is something that I'm seeing like amongst people that I know and came up with and all this stuff. Where somebody goes out, maybe they just graduated college, or maybe they did a few years ago and they finally get a good job relative to what they had before. Maybe they were working for minimum wage before, making 10, 12 bucks an hour or something like that. Because where I'm from, the minimum wage is still $7.25 an hour. Okay, that's what I started with. So I see it all the time, where somebody is making, we'll make our financial statement here. This is our income here. These are our expenses. These are our expenses here. Somebody's making, $2,000 a month. Take home pay. Take home pay. And let's say they have $1,500 of expenses. So what does that mean? That means that they have $500 to invest every month. And what is investing exactly? Well, we'll get into that in a later video, but really what I want to focus on is the building block of wealth building, the building block of wealth building. The first crucial step to understand the accumulation of wealth is this, okay? If someone's got $2,000 in income, $1,500 in expenses, they've got $500 left over. And when we say expenses, we're talking about rent, utilities, insurance, food, kind of like the non-negotiables, right? The non-negotiables. And whatever, maybe your non-negotiable is, well, I have to take out my spouse, my girlfriend, boyfriend, whatever. I have to take them out once per week, once per month, and there's a budget for that. Like, that's non-negotiable. So everybody kind of has a baseline, like, if you're living and breathing, you pay for this, right? And then there's, some additionals on top of that, depending on what you want out of life, right? But this is, everybody's got these, right? And hopefully this is positive, right? And if it's not, then you got to figure out a way to get this up or get this down, right? Right? So, but here's the deal. I see this time and time again. So maybe this is somebody's, first job or whatever, and then they go and then they get a better job, or they start a business that monetizes quickly, or they become a salesperson. They start, selling big ticket items and making, substantially more money, and they go to $5,000 a month. And, if you think about it, that means that they now should have $3,500 a month to invest, right? Again, this is just simplified numbers. Make this number whatever you want. Make it $2,500. Make it $2,200. Make it a 10% raise, right? 5%, whatever. Lots of people look at that and they say, well, geez, I'm making 150% more per month. That means that I can spend 150% more. That means that I can, my expenses now are this. I can go out, I can buy a home. I can buy a car. I can buy a TV. All on credit, by the way. And, I can provide. But the problem with that thinking is you're robbing yourself when you pay for those things. I'm not saying that you can't buy nice stuff. I'm just saying, like, it would behoove Americans to realize that there's no need to buy nice things. I live in a shitty apartment, and I drive the same car that I've driven since I was 19. It's a Honda Civic. But I have, stocks, cryptocurrency, rental properties, precious metals. I have assets. And I've accumulated them in a very short amount of time by just focusing on taking as much of this as I can and increasing that and investing it into things that are going to, I'm investing it into the life that I want to have. So recently my income went up by 50%. And that means that I'm investing more money, but something I'm also doing is I've increased an entertainment budget. So I can take out my girlfriend, because she doesn't live here. I live in Texas, she lives in Idaho. So I want to see her at least once a month. So that's in the budget, right? That's in the budget. That's a worthwhile expense to me because I'm investing in a relationship that's meaningful to me, right? And so I see it as an investment, right? Because I'm spending that on an experience. I mean, I could go out and I could buy a Porsche on credit if I wanted to. I could buy a nice car, right? But then I would just look rich, where this is really what's making you rich. The ability to have an income that is much higher relative to your expenses, and then buy things that increase your income. So that's investing 101 as far as I'm concerned, is knowing what your income is, knowing what your expenses are, and knowing what, the difference is, what your personal cash flow is, and then optimizing that so that you can increase your income and increase your wealth at an exponential rate. And maybe this is earned income. This is from your job. Maybe you don't like your job. Well, if you don't like your job, if you don't like having a job at all, then you definitely don't want to go buy a house and a car and a TV. Because then you're just reducing your ability to funnel more money into your income, right? So if you love your job, again, this is all relative to your situation, right? There's no one size fits all thing. But time and time again, we see it. We see it out there where someone starts making just a little bit more money and they go out and they buy something nice and they buy it on credit, so it increases their expenses. It increases their expenses. And then they're, feeling stressed out. They're feeling the anxiety of having to put all of these liabilities on their back and carry that weight of debt. So then they're like, man, hopefully I get a raise this year. When in reality, if they just sold all those liabilities, they'd be giving themselves a raise, right? Because this is really what you make. The difference between your income and your expenses. That's what you have to play with. So optimize that. That's what I've done. Even when I was, barely making any money, I was doing this. And I was buying assets, making $14 an hour, buying assets, investing in stocks, investing in that kind of stuff. So it's just a matter of what is this and what is this? Do you know that? If you don't, that's step one. Because if you go out and you start buying stuff, you start buying assets, you start buying expenses, you don't know how much money you actually have to do that, that's going to be a problem. So anyways, hopefully you found this content valuable. If so, then hit the like button, hit the subscribe button. I always forget to say that until the end. Again, this has been fairly rudimentary, but this is kind of like investing 101. Do this first. Know what this is, right? And then in a later video, I'll talk about how to take this and work with it. But yeah, hopefully you found this valuable as I have. And until next time, everybody. All right, see ya. Thank you.